Let's bring on Jamie from Consumer Watchdog to talk about Uber's commercial insurance.
Jamie, welcome.
My pleasure to be here.
Absolutely, yeah. It's a small world. We crossed paths a while ago, and then this issue that you guys are covering heavily now over the last couple of months is something we've been looking into for years, actually. And it concerns the rider and the driver. But before we get into our deep conversation about this, introduce yourself and what Consumer Watchdog does.
Yeah, I'm the president of Consumer Watchdog. I've been doing it for about 30 years. We're a group that protects consumers largely in California. We started out regulating auto insurance in the state 35 years ago, actually 40 years ago. There was a ballot measure called Prop 103. And we've been regulating companies ever since and intervening to make sure their rates aren't high. And we went on, did a lot of other work on HMO reform, health insurance reform, utility reform. And whenever the bad guys come after us, we try to defend us and try to defend the public. And Uber, unfortunately, has picked this fight. They put a ballot measure on the ballot to take away people's rights to medical recovery when auto accidents, take away their contingency fee attorneys. So we got a little angry about that at the end of last year, and we started to watch them a little closer and started to do some research on them. And that's what resulted in a lot of these Uber reports we've been doing and brought us together.
Yeah, absolutely. And so let's take it from the top. It all started with an email I received from you talking about Uber's insurance, well, I mean, schemes. It's a scheme. I'm not going to call it a scam, although a couple of days ago, Level?
Lever, yeah.
Yeah, did a very scathing article about that. They called it a scam, actually. I'm going like, okay, we need to hold back on that a little bit. Poking the bear is good, but, we need to make sure we're poking the right bear. But so what did you guys start? How did you guys start looking into this, specifically the insurance companies that you came up with, which is Echa Insurance in Hawaii? Do you know why it's Hawaii? Because both companies, by the way, have captive insurance companies in Hawaii. What is this like? Explain us, first of all, what a captive insurance company is.
Well, captive insurance company is a company owned by one company or one entity. And so it doesn't have the same disclosure requirements as all the companies doing business in California. If you're an insurance company doing business in California, you have to disclose exactly how much you take in premiums, exactly how much you pay out in claims, exactly your administrative overhead, your corporate profit. Captive insurance companies don't have to disclose any of that. They're a complete black box because their only customer is one company. In this case, Echa's client is Uber. And it's also run by Uber executives. Everybody on the board is an Uber executive. And so it is it's basically a subsidiary of Uber. We got into this looking at Uber's claims because Uber went to the legislature last year and said, our premiums are going through the roof. We need relief. We need to lower our uninsured motorist premiums. 45 cents of every dollar is going towards insurance. It literally said that. Yep. And so we started to look into that, whether that claim was true, and we found out that like 95% of the insurance payments that is taken in from riders and drivers goes to Uber itself. Only about 5% is with a third-party insurance company. So Uber is basically self-funding its reserves, and it's got huge reserves. There's $12 billion in reserves. $12.5 billion, and that number has grown in the last 3 years by 100%. So it's not putting out money for claims, it's taking in money, and it keeps growing those reserves. It's growing them at a very quick rate, which suggests that it's overcharging for insurance. It suggests it's overcharging for insurance because otherwise its reserves would be depleted. Yeah. So that's why we started looking at this whole scheme, because of the claims made in the legislature and the claims made in many states in New York and other states that our insurance is too high. We're paying too much for insurance. We need tort reform. We need relief. And it's just not true. They're sitting on a lot of this money. They're paying the money to themselves, and they're creating the conditions where it looks like they need some relief in the liability system. But in fact, they're pocketing the money. We think they're pocketing the money to pay for robo-taxis and the rollout of robo-taxis, because there's a $10 billion investment they're going to make in robo-taxis, according to reporting from the Financial Times. They've got $12.5 billion in reserves, And we know that they've taken money out of these reserves in the last 2 years. They've taken $4 billion out already and converted it from these insurance reserves into cash on the books. Now, when it goes into insurance reserves, it's tax-free money. They're not paying taxes on that.
Yeah.
When they take it out and turn it into cash, they'll have to pay taxes. But if they do it in a year in which they have a big expense, for instance, an investment in robo-taxis, the taxes wouldn't be as much as if they had just paid for that expense in the year the money was made. So it's a tax shelter. The captive insurance company is a tax shelter. It's a way of controlling money and cash flows and using it to the corporate benefit. But most importantly is they're lying to the public. And we think they're lying to the riders and the drivers when they're taking as much money in insurance as they are, because we don't think they need that level of money. We don't know because we can't see Echa's books because it's a captive insurance company the way we could another insurance company. But we know that other insurance companies, commercial insurance companies, it's about 6 cents per mile that it costs to get insurance. Now, Uber has different insurance obligations, but we're looking at, at costs per mile that are 10 times that, 60, 70 cents per mile. In some cases, we know that people are being overcharged for insurance.
Yeah. So all this is good, except that is this illegal, first of all, right? I mean,
well, I don't know. It's only illegal when a court says it's illegal, and
Okay.
they haven't been taken to court yet. There is a case that was just filed against Blue Hill, which is one of the insurance companies they do business with. And that's on a different issue, which is Blue Hill isn't paying out adequate claims when drivers get into accidents and riders get into accidents. So that's one of the things they've been sued over. They haven't yet been sued for overcharging people and sticking this money in a reserve. We are investigating whether there is a legal basis to do that. There very well may be, but the problem is Echa is a black box, and we know what money goes in. We don't see the money that's coming out. It could very well be illegal. The problem is that a lot of drivers have arbitration contracts.
Yep.
A lot of riders have arbitration contracts, and drivers have arbitration contracts. But some people, you can opt out of those in certain circumstances. So a lot of these cases wouldn't get to a court; they'd be stuck in arbitration. And arbitrators are not. It's not a great venue for litigating an action like this because arbitrators don't really have the ability to do equitable relief. They oftentimes get repeat business from Uber, so they don't want to rule against Uber. And all the documents are kept in confidence. They're not public documents. So we have that arbitration hurdle we have to get through. But if you're a driver and you feel like you've been ripped off by Uber, we want to hear from you. You can contact us at consumerwatchdog.org. We'll investigate the issue. If there's a legal basis, we'll bring a claim, or we'll bring the issue to the regulatory authorities. They're regulated by the Public Utilities Commission. Some of their operations are regulated by the Department of Insurance. Unfortunately, Echa is not regulated by the California Department of Insurance. They'd be under the Hawaii Department of Insurance, and because they're a captive insurance company, their obligations aren't great. But we're just trying to figure this out. So any information anyone has would be helpful.
Okay, so the email is in the show notes, folks. If you guys want to get in touch with the Consumer Watchdog, you're more than welcome to do so. So on our end, our audience is 99% drivers, right? And we see every single time we give a ride, we see a receipt at the end of that trip, okay? And what we have noticed as drivers, which I am one, over the last 3 years, 4 years, specifically 4 years, is that the commercial insurance item, which they call external expenses in some cases, has skyrocketed. So if I did a trip, let's say in Los Angeles, and California and Florida is one of the couple of the major headache states for Uber and Lyft, it seems like, is that we used to have a $10 cap per trip. Then they moved it to $20. For the same exact trip, it went to $20. Then it went to $40. Then it went to $50. For an individual trip, to have a $40, $50 insurance, commercial insurance for a single trip, to me, is a little exorbitant. I mean, I don't think it's fair. Not only it's fair, it's also not fair to the rider, because the rider ultimately is paying for this commercial insurance. Uber is not paying for this. When Uber quotes you a price, upfront price as a rider, they include all these expenses, government expenses, airport drop-off expenses, insurance, commercial insurance, all that stuff. And then if they charge you $100 and you were correct, Uber is saying that 45 cents out of the $100, $45 out of the 100 is going to commercial insurance. Seems like a little asinine to me, because the other thing, Jamie, is as a driver, if I added all the commercial insurance charges that Uber has charged me as a driver, I might as well go get my own commercial insurance. I'll be saving so much more money, right? So
Yeah,
I am
absolutely.
with you. I am with you. Where is this money going? What is done with this money? I'm definitely going to dig into it as much as you are.
Yeah, I mean, it doesn't make much sense. We've seen a lot of driver receipts, and I mean, there seems to be it seems to be an overcharge. And the thing is, the thing that's kind of baffling, we're just kind of piecing this together on the air, but why not, is that you're charged for insurance with Progressive, right? Or with another company called Brewhill. But we know that Aleca is holding like 95% of the risk. So it kind of is like they're fronting this, for Progressive's fronting this, and then Aleca is somehow accepting the big risk on the back end, which to me feels like fraud. It feels like a fraud, because that's the way they're hiding the fact that the money is going to Uber. And that's something that really needs to be explored and uncovered. But unfortunately, because Aleca is this captive company, we can't see how those mechanisms work.
There's a lot of black boxes in the Uber system.
Exactly.
The pricing mechanism is a black box for the driver, for the rider. It's a black box. They have these algos that are just going on and on and on. And I'm sure this insurance thing is in there as well. And my thought process in all of this is definitely something that should be looked at, obviously. But then I have noticed, at every conference call or earnings conference call that I listen to, quarterly earnings call, the insurance reserves have gone up. And the other thing that you may or may not know, because we're drivers and a lot of riders don't have a clue what the drivers go through. Maybe but we used to have about 5-6 years ago, maybe 7 years ago, we used to have $1,000 deductible if we got in an accident, right? Now it's $2,500 as a driver if we got in an accident. The first $2,500 is on you. So they keep raising the deductible. You would think the insurance rates will go down. It wouldn't go up. So there is something going on, and we've been interested in this topic for a long, long time. And you guys came around at the right time. So yesterday or a couple of days ago, there was another article which actually called this a scam, and then Uber responded to that article. And it's in the article. I don't want to quote you or read you. I want you to have your opinion. Has Uber responded to all your allegations, by the way?
That was the first time they've really responded. They did a little bit in the LA Times article, but their response is just, it's very technical insurance stuff, and they don't know what they're talking about. That's their whole response. They're not denying that Aleca is insuring the vast majority of their liability. They're not denying that they've made these statements about insurance being a huge part of the cost of rides, and they're not saying that it's just. I don't see them saying it's justified that insurance is actually a big part of the rides. They should have to justify that. They're just pulling a number out of a hat, and then when the money goes in the bank, it stays in the bank. And it's not just that there's a $12.5 billion reserve at the end of 2025. That's with $4 billion being moved out of the reserve onto the cash book. So it's even more than that. It's, they're acquiring an awful lot of money. It's like a big piggy bank. And that big piggy bank is being saved for something. And we think it's being saved to actually replace the drivers with robo-taxis. And we think it's a little more insidious than that, because they're spending a lot of money on these ballot measures. In California, they spent $70 million on a ballot measure to limit their liability. They have a federal amendment called the Fong Amendment that was just stuck in the transportation infrastructure bill like 2 a.m. the Friday before the Memorial weekend. So they won't have any liability in any state. They've got liability laws in New York and other states. And what they're trying to do is limit their liability so that when they roll out the robo-taxis, they won't be responsible if those robo-taxis hurt people, because it's not a safe. These are not safe yet. The robo-taxis are not anywhere near safe, and particularly a company like Uber that hasn't done testing on them. So that if they can replace the drivers quickly and roll the robo-taxis out quicker through limited liability, they'll do it. And so to me, it's like an evil genius plan, right? They're number one, collecting this money by lying about how much insurance costs. Two, they're going to use that money for robo-taxis. Three, they're going to replace the drivers with robo-taxis that are much more dangerous and when they cause harm, they won't be accountable for them. So I think this is a company that's like way off the rails and what their ambitions are here. I see the robo-taxi testing. We've studied this for years. We were one of the first people warning about robo-taxis, like, 10 years ago when they first came around. And I know Uber's testing is very far behind. They partner with a company called Lurid, which is actually a manufacturer, and a company called Neuro, which makes the AI on robo-taxis. They've had like 200,000 miles on the roads all last year testing. I mean, Waymo has 5 million miles testing and hundreds of millions of miles in practice. Waymo is so far ahead of anything that these companies have done, and yet they're going to put 20,000 of these lurid neuro robo-taxis on the roads in the next couple of years. It's really dangerous. And the only way they can do that is if they limited liability. So I see it as kind of a three-part scheme. And the good news is we have a ballot measure to counter their measure, which would create greater liability for Uber. There's a standoff we don't know if it's going to go forward, if both these ballot measures are going to go forward. We'll know on June 26th whether they're both going to go forward. The Uber one to limit liability, the counter one to increase liability. But Uber's really pushing on all these fronts. And the one to me that is just like the basic simple one is drivers and riders are getting ripped off and someone needs to do something about it.
Okay. Let's just take it back about a couple of minutes of what you're talking about. Uber spending all this money on lobbying and ballot measures around the country, specifically in California now, and the connection between their executives and all these ballot measures. Let's talk a little bit about that.
Yeah, I mean, the interesting thing is they are one of the few companies that I've ever seen. I've been doing this for 30 years at this company, and 5 years another company, 3.5 decades. And I'll tell you, I haven't seen a company of this size incentivize their executives for public policy changes, give bonuses to executives for public policy changes. I've seen oil companies, I've seen utilities. I've seen companies give executives bonuses for earnings results, for corporate results, but never for public policy changes. And Uber has done that. In 2025, they gave a bunch of executives bonuses for making that change in California law to limit their liability on uninsured motorist claims, and also for making progress on federal tort reform. So they're actually incentivizing their executives with millions of dollars to create public policy outcomes, which is very dangerous in my view, because it leads to the place where company executives it's like a bounty system, they see it as in their personal interest to get these things, and they'll do it regardless of whether it's safe or right, and they'll often bend the truth, in my view, to get that way. And that's why they had this executive go before the legislature, and I think just completely lie when she says 45 cents of every dollar is going to government-backed insurance. Well, it's going to insurance that Uber is setting the price of, that Uber is stockpiling. Is it really insurance if Uber's stockpiling it somewhere and it's not going out for claims? So, Tony West, a good example, who's one of the chief legal counsel, he's been incentivized for federal policy changes and the California policy changes. And, it's a weird situation because he's Kamala Harris's brother-in-law. He was a presidential advisor to the Kamala Harris campaign. If Trump winds up signing this federal tort reform that they have just stuck into the transportation bill, he'll wind up giving Kamala Harris's family a big payday. I don't know if that would factor into his reasoning. It's just Uber breaks so many taboos, and the taboos are there for good reason. There's a reason that companies don't incentivize their employees with financial incentives for public policy changes, because it makes for bad public policy. It makes for this bounty system, and Uber's doing that at the same time as they're breaking a lot of other rules. I mean, this is the company that's goes go fast and break the rules. You know, go fast and break things.
Well, that's how the company started. I mean,
Yeah.
with Travis Kalanick, it started, you know, they go fast and break things. And then it seems like on this front anyway, it's continuing. I had a quick question for you about, you said you have a ballot measure opposing Uber's ballot measure in November. Is that supported by the trial lawyers, or
Yes,
are you
it's
getting any
completely
support
supported
there?
by the trial lawyers. So what happened was, so Uber did this change on uninsured motorists at the end of last year.
Yeah,
It came
SB
out of nowhere,
371, yeah.
really. They said that one of the ways they got it through was they got SEIU, a union on their side, saying we're going to allow you to unionize. And so they did that. And a few days after the governor signed that bill, we thought that was the end of it. They filed the ballot measure. They wanted more. That got the trial lawyers into gear, and they came up with the ballot measure they thought would be most successful against the Uber, and it turns out it is. To go after them over their sexual assault records for hiring bad drivers and for creating strict liability for those sexual assaults. That initiative polls like 74, 75%. Very strong initiative. The Uber initiative, by the way, does not poll that well. It polls about 48% on the first ask. And I don't know why they did it that way. It's because it limits medical recovery in accidents, and people don't want their medical recovery limited. But after that, the trial lawyers developed this initiative. A couple of weeks later, they announced this big robo-taxi initiative, thereby screwing the unions who just gave them this victory in the legislature. So they've offended just about everybody. The trial lawyers really kicked it in gear. They raised about $75 million to fight the one initiative and to put the other initiative out. And so now it's kind of a stalemate. And they've got 3 weeks-ish, a little less than 3 weeks, 2 weeks left before they have to determine whether or not both initiatives go forward or both initiatives go off the ballot, or whether there's a compromise. And I don't know what's going to happen. I don't think anyone knows what's going to happen at this moment. But it could be a big showdown at the ballot. It could be a detente. We don't know.
Okay. Well, our audience is putting up some questions. I picked 3, Chris. Can you start with the first one? Can we just show that to Jamie and then have his reaction to it? Okay, so Matt from Boston, he's a good friend, and it's a fair question. So Echa only handles legacy claims from 2019 and prior. I'm one of this company's fiercest critics, but I'm also fair. Got to get this right. And then the next question from Matt again is, we know Echa is holding 95% as you claim. How? Show the proof, show the documentation. So I think that's a fair question.
Yeah, well, in our report, which is on our website, consumerwatchdog.org, we went through the Securities Exchange Commission documents, and it shows that it's actually more than 95% of the reserves are self-funded reserves. It doesn't say it's with Echa, but Echa is the only captive company we can find, and that's the only way that they could actually hold self-funded reserves, unless there's another captive company we're missing. And it does actually break out the amount of third-party insurance, and that's how we know it's less than 5%. That's what they're reporting on the Securities Exchange Commission documents. If there's something else, they should come forward and talk about it. They contested that with a reporter too. They said those numbers are not accurate, and the reporter said, "Well, tell us the numbers," and they won't tell us.
Yeah,
that's what they're representing the shareholders.
Uber has a tendency of saying, "Trust us." That's what they do most of the time.
That's
one
what
last.
I think it did start out as a legacy company.
Yeah.
But I think it's grown into something else. But in any case, it's showing self-funded reserves, and there has to be a captive holding those self-funded reserves. We assume it's Echa because it's the only one we could find.
Okay, and one more comment, then if you can respond to that. Daniel says, I wonder if those bonuses violate campaign finance laws.
Good question. No, though interestingly enough, in California, there is a law preventing success bonuses for lobbyists. So if you're a lobbyist, you can't get paid more if you succeed. But if you're an executive but not a lobbyist, you can get paid more for successful legislation. But no, there is nothing that we found that would violate that.
Okay, very interesting. So we're running out of time. I'll give you a couple of minutes to close us up, but we'll definitely keep in touch, obviously, because this is something that we've been looking into, but then we just couldn't make the connection until I read your piece alleging the Echa deal going on and washing the cash, basically. I'm not going to call it money laundering, but it's just kind of cleaning the cash, bringing it from the other side for acquisitions of AVs. Now they're looking to acquire a $12 billion company, Delivery Hero in Europe, which is another delivery company. So they need the cash, obviously, to do this. But yeah, I'm really interested in this topic, and we'll continue doing it. So I'll give you a couple of minutes to close.
I still want to connect the dots. All the dots are not connected.
Yeah.
We can talk about the dots we know about. How does the premiums that are getting taken out of drivers' pay wind up in the self-funded reserve? It's still a mystery to me.
Yeah.
We know it does from the SEC filings, but how does that happen?
Yeah.
And so anyone who has information on that, we're really trying to investigate this, and we're going to work with regulators to see if they can force these issues. The Public Utility Commission should probably get these answers, and they should make them public. So we're going to keep working on it. We're not going to give up. Even if these ballot measures go away, we're not going anywhere. So please be in touch. If you have any information, go to consumerwatchdog.org, send us a complaint form or send us an email. We want to hear from you. Thanks.
Yeah, CPUC is the outfit that actually gives them the TNC license to operate in a lot of states. Well, in California,
yeah, they've got problems too. The Department of Insurance has got problems with the Public Utilities Commission has problems, but they do have a duty to make sure that what drivers are being charged and what riders are being charged is like not exorbitant and is actually going to what it's supposed to go to. Yeah. That's just fairness. And so we're going to be making a case there. Yeah.
Okay. All right. Well, here's Jamie Court from Consumer Watchdog. Jamie, good to meet you. Looking forward to staying in touch with you, obviously. And if we get an update, we'll have you back on again.
Well, thank you. Appreciate your time.
Bye. All right. Take care, Jamie.
Thanks, Jamie. All right. Thanks for watching. That short little clip was from our live stream, Show Me the Money Club with Sergio and myself. Tuesdays, 6 p.m. Eastern, 3 p.m. Pacific. Make sure you subscribe, turn on all notifications so you'll be notified when we go live, as well as all of our awesome content. Make sure to check out this video right here, which will take you to the entire live stream, or check out this video right there. All right, drive smart, everyone.